Hey guys, it's Andrew from Trading Mastery. Welcome to today's trading tip. You know, investors, they generally always sell in a very emotional way. They've been doing it now for more than 100 years. In fact, they've been doing it for a couple of 100 years since share markets began. And if they're able to simply place the positions in consistent, rational, and logical ways, they would actually make a lot more money. And it's really interesting because the way we actually evaluate and buy businesses that are listed on the share market really is no different to the way we would evaluate, do due diligence, and buy a business that wasn't listed on the share market. But because the prices are quoted on a daily basis, people tend to get very emotional about, the share price rather than focusing on what the business is actually doing. And that's what I mean, I should say, when I say emotional. People get emotional because the share price might go down 3%, 5%, 10%. But at the end of the day, the share price is just simply telling you what someone's willing to pay you today for the shares you own. It doesn't mean that you have to accept that, and it doesn't mean that the business is performing any better if the share price is up 10% or down 10%. It doesn't mean the business is performing poorly. What it means is that that's what someone's willing to pay you today. So professional investors like myself and others are making decisions based on what the business is actually doing internally with its earnings and how it's growing the economic moat, what the management's doing, how the business is going to perform in the next 5, 10, 15 years, not what someone's willing to shout out the window and tell me what they're going to pay for my shares today. Because that's the way in which the average person invests. When markets go down, they get emotional. When prices go down, they get emotional and they sell. And when prices go up, they get very excited. If a price is going up or down today, tomorrow, next week, or next month, it does not mean that business is doing any better or worse. What you need to focus on is what the earnings of that business is going to do and what that business is going to be worth in 3, 5, 10 years from now. Take the emotion out of it and look at things logically and look at things rationally. If you'd like to learn more how to do that, jump across to our website, tradingmastery.com, and there's a 7-part mini course waiting there for you that will step you through that process. Until next time, happy trading.